Joining us for a conversation is Dean Taylor, the CEO of Diamcor Mining, which is focused on supplying rough diamonds to the world markets. Mr. Taylor, thank you for joining us today, sir.
No problem. It's great to be here.
Well, it's a pleasure to speak with you today as Diamcor Mining has some important news for shareholders regarding operations and a corporate update on the flagship Krone-Endora at Venetia Diamond Project. Before we begin, Mr. Taylor, the diamond space has been attracting prudent capital that is seeking companies that explore and mine for diamonds. For someone new to diamonds, why is now an opportune time to consider being a shareholder in the diamond space?
Well, I think look, when we look at the diamond space overall, it's not widely followed. There was two major players in the diamond space. One being Alrosa, which is the Russian government, which is obviously under pressure right now and sanctions. That was about close to 35% of the diamond market of where the diamonds came, and those are obviously with everything going on with Russia and Ukraine right now. Those diamonds are obviously not they're not something that the Western world is buying, nor do we expect that'll happen for quite a while. So that's a big part of the supply chain that's missing at the moment. The space in general was already under pressure. If we look at what has gone on, with the finding new diamonds, diamond mines are extremely hard to find. There's really nothing of huge significance that's been found in the last sort of 15 years. And if we go out and, any of us went out and found the next diamond mine to supply, it's probably going to take us, 10 plus years, maybe 15 years even, to get it into production, and probably $2-3 billion. And even then, when we look at the total production of what it was worldwide, it was probably somewhere around 130 million odd carats. So if you take 35% of that out, you put in no new finds, and what you're going to see is that the supply of natural rough diamonds, the most valuable diamonds, is dwindling. And you've got a lot of retailers, you've got a lot of people that still are getting married, they're still having anniversaries, they're still having birthdays, all those types of things, and so the shortages are very real, and they're growing. The prices will capitulate from time to time as supplies go up and down depending on the years, but the overall dynamic is that we're looking at shortages of rough diamonds, and that will certainly, we expect to see synthetic man-made diamonds sort of come into play, but the big money diamonds that everybody wants, the natural diamonds, they're like art, and so we just believe that those those stones and those diamonds, the gem quality ones especially, are just going to continue to go up in value. So it is a very compelling time in terms of supply demand, and like I said, the dynamic with having the two biggest suppliers, like I said, Alrosa being 35%, De Beers, which is part of Anglo, being probably around that same 30-35%. Those are the two big majors, and the rest is made up by probably 10 or 15 other companies, and that's it. So it's an interesting space.
Sir, you referenced the synthetic diamonds. On the most scale of hardness, are the synthetic diamonds just as hard as actual diamonds?
Yeah, a synthetic diamond is created in what's called HPHT, which is high pressure, high temperature. It is a diamond that's grown using carbon at high pressure, high temperature. The pricing on them is set obviously very low. And most of it, we see the opportunity in the synthetic side really as being used for industrial use, and then and certain other lower end jewelry kind of deal. But the reality of the situation is that it's similar to art or high end consumer products. People gravitate towards rarity, they gravitate towards quality. Natural diamonds probably 20% are gem or near gem quality. It's extremely rare, and that's going to command price for the long term, no matter what you do with synthetics. But we see sort of synthetics as filling in some of the gap, but we don't see it as being something that replaces the high end natural diamond. Those are always going to command the most money and be the most valuable.
Let's find out where and how Diamcor Mining fits in the narrative. Mr. Taylor, please reacquaint us with Diamcor Mining and the opportunity the company presents to shareholders.
Sure. Diamcor has always been, we are a production-focused company. We do some exploration and development of projects, our key really is to acquire non-core assets from the majors, or stuff that is, production capable, production ready, or near-term production. Those are the types of things we look to acquire. Something that may not be, big enough for the majors, but still is a very compelling opportunity for a company our size. Then we supply to probably a couple of hundred of the key suppliers in the world. We sell everything in rough form in Dubai. And typically we look to try and acquire stuff that is a high percentage of gem quality or near gem quality. Right now, the key focus that we have is on our Krone-Endora Venetia project, which is co-located with De Beers' big $4 million Venetia project. And so it's quite an interesting project in that about the estimate is somewhere around 1,000 vertical meters of the top of Venetia was pushed off in a glacial event. That material from the top of the pipe was just distributed in as a alluvial fan from the higher grounds of Venetia to the lower grounds, including our Krone-Endora properties. And so we end up with a near surface, essentially a displacement of a mix of material, diamonds and that. Same diamonds, same quality, everything else. So it's a massive sort of more or less gravel pit strip mining operation where we take that out and recover those diamonds, and then we sell them to the world market. A very high percentage of gem quality, gem or near gem, probably somewhere in the neighborhood of about 60% or something like that. So that leads to a higher dollar per carat, a very attractive product.
Well, you say it so modestly, but this is the fourth largest diamond mine in the world that you're adjacent to, and you also have a resource there. Can you tell us more about the resource?
Yeah, it's look, Venetia is one of the most prolific diamond mines in the world. It is one of De Beers' flagship mines. In its peak, it was doing, somewhere in the neighborhood of about 9 million carats a year from the open pit. So, 750,000 carats a month worth of diamonds. They've recently finished the open pit portion of it, and now I think they spent about $2.5 billion to go underground now to continue going for the next 15 years. So, that project in itself, that De Beers project, is a massive one. You could imagine the benefits to us. Being in an area where we have paved roads, right to the gate. You literally go to the gates, the security gates of Venetia, and either you go straight through to their security, or you turn left and go to ours, and then go around to the back of Venetia where the displacement has taken place. So we have a lot of benefit in terms of where we're located. We know what the diamonds are worth. It's the only project like it in the world where we see this. It sometimes gets confused with Maurice, with an alluvial, where you have some of these African countries where you have rivers that run over top of kimberlite pipes, take the diamonds, distribute them downstream. That's not what this is. This is a direct displacement that occurs directly adjacent to the Venetia pipe with the same diamonds. So it's really unique, and it's an interesting project, to say the least.
Well, thank you for the clarification. One of the big, and I do mean big, feathers in your cap are the strategic alliances that Diamcor Mining has been able to forge with two of the most prolific names in the diamond industry. I'm talking about De Beers and Tiffany. Mr. Taylor, why are two of the biggest names in the diamond space committed to being long-term partners in Diamcor Mining?
Well, I think that when we look at it, with De Beers, anytime they sell these type of non-core projects, they put them out in an RFP. It's a competitive process. They pick companies based on things like, are they capable of taking the project forward, Black empowerment, ESG, all these different kinds of things. They look at many different things when they do these projects. So in this particular case, it was probably a 2+ year process. We were essentially in the end chosen to acquire it. We do that, and then following that, we essentially made a strategic alliance with Tiffany's. Tiffany's been very supportive. Of course, have been bought out by LVMH, but these are two giant, very high profile, they're just excellent companies all around. They've been very supportive, and really their primary focus is supply. Even when we did the strategic alliance, it's not an offtake agreement where they get a discount. It is a strategic alliance, which is obviously requires a lot more work and things like that. But in the end, it's really about supply. Long ago, Tiffany's had already identified the fact that, hey, there's potentially going to be shortages. It didn't materialize. For a number of years there was enough supply and it never really became a problem. Now it's back to that situation where I think a lot of the big players and a lot of the really good diamond companies in that are really they're really looking for supply because it's getting tougher and tougher to buy and get. So we're extremely lucky. Like I say, both companies are very supportive. Of course, operating, co-locating with De Beers like that is not something that you see very often, and it does require, that we operate at a good level, and they're involved in terms of overlooking and seeing what we're doing. So we're very proud of that. And Tiffany's, like I said, it's for us, it's all about trying to grow the project out, trying to increase volumes, trying to expand. Get more diamonds and get those diamonds to Tiffany's if they want them. They of course only take the very best stones of what we have, but still, like I say, they've been extremely supportive, and we're very lucky to have that strategic alliance with Tiffany's.
Well, you referenced the word lucky. Luck is defined as when opportunity and preparedness meet one another, and that's what we have right here.
Yeah, that's the truth. You have to get a bit lucky sometimes. Anybody tells you any different, I don't think it's being very truthful. That's for sure. Yeah.
All right. Well, as we embark on this new year, let's recap the tumultuous 2022 in terms of the world economy and world geopolitics. What were, if any, the impacts on the diamond space and the impacts on Diamcor Mining?
Well, it certainly was it was an interesting year in that, COVID was obviously a tricky time. For us, pre-COVID, we were ready to, essentially start doing what we were doing right now. COVID was a major setback. You literally had less than a week to shut the mine down. And that, which we thought originally would be a short-term thing, turned into a very long-term thing. So it was expensive. We had great shareholders. We essentially had a lot of support from our shareholders to get through that particular period. And then coming out of COVID was then quite amazing that we got out of it, survived it, started things going. And then, of course, in the diamond industry, the big thing is the invasion of Ukraine by Russia, and how that all materialized and developed and just continued on. Obviously, a very tragic situation, which led to, basically worldwide, sanctions against Russian diamonds and things like that. We'll still see those stones being sold into China and different areas like that. But as far as Europe, the main countries that actually make up most of the luxury sales and stuff like that, those diamonds are pretty much out of play. So that was a big development that happened there. From an operational standpoint, 2022 for us was tricky in the sense that it's widely reported that South Africa had issues. Their national power supplier, Eskom, a lot of up and down there, a lot of problems with the power system. That obviously had a negative effect on us. But, we've got backup gen sets built into the project. We've got quite a bit of infrastructure built around dealing with that. And that'll be one of our primary focuses as we go into 2023 as well, is to become more independent of that power supply. And that's sort of something that we see as important going forward. But yeah, it was a different year. It was a good year in the sense that we did show profitability. We've been able to get some bigger stones. Now the December quarter, we haven't put the financials out yet, but our gross revenues are pretty much similar to what they were the previous quarter. So we're very optimistic about that. And now the key for 2023 forward is just to keep doing what we're doing in terms of growing processing volumes, increasing the amount of material we're processing. And then, bigger equipment, power systems, some additional stuff to add to capacity. And then we're going to also start branching out. We've only been working on a very small portion of this project, probably about 15% to date. But we're going to, we've always said, and we've made it very clear that, the plan here was we felt that we could get a near-term production scenario with potential for cash flow and earnings even. And from there, we would then branch out to the greater areas and see if we could increase the finding more of the deposit that were the displacement from Venetia. So it's going to be, I think it's going to be an exciting year. It's a bit of a tricky end to December and to 2022, but overall, it's a very, very positive time. So it's exciting.
I'd like to go back a moment here to the blackouts. There's the word here I'm thinking of immediately is the word resiliency. Your company had blackouts out of your control. You had some lessons learned, and you're prepared in the event that more should come. You have a plan of action here. But what's impressive to me is that you were able to have positive cash flow at the end of Q3.
Yeah.
That speaks volumes of your business acumen there.
Yeah, there's a few things that affect it, Maurice. There's, obviously it's volume. We've talked a lot about the development of our we've got two very large plants that we've developed. Those we've increased the size of to increase that hourly volume that we're able to produce through those, or put through those plants. The power systems have always been a little sketchy. We see that, oddly enough, we're seeing more and more around the world with power and rolling blackouts or load shedding, as they call it, that type of thing. We're seeing it all over. It does take, in mining in general, there's a lot of different variables. There's a lot of different things that happen that can cause delays. That's what makes it tricky. You definitely have to be resilient. You definitely have to make a plan. What we'll end up doing is we'll end up, what we'll look at really and try and get done in the first quarter here is maybe an extension of the power line to get onto what's referred to as critical services, where we're only subjected to maybe one outage at a time instead of 3 or 4. That makes it difficult for us taking a plant up and down. The installation of bigger gen sets so that we can run on those without any issue. Battery backups that allow us to not have to shut the plant down when there's a switch from the main power line over to the gen sets. And then also power conditioning, which is important in the sense that the power is not, it's like gasoline. If it's lower octane or dirty or dirty power, it's hard on motors, it's hard on everything. So we put in systems that condition that power so that we have more potent, clean power. So that's one of the key objectives that we look at. We looked at solar. I don't think solar is a solution. Most people, we've looked at it for a couple of years. I don't think that most people a lot of people just think, well, you just put in solar panels and you operate on, solar. That's not really the case. It's a supplement. You still need the power line. You still need the gen sets. You still need the batteries, everything else. So I think for now, we've dealt with the ESCOM situation and planned with it for quite a while. It's unfortunate. But, that's just, like I said, that's part of mining where you have to be resilient and you have to make a plan. And that is one of our key things that we look at as being something that we definitely need to address. It's been off and on. We may find that we put in this system and don't use it really that much. Who knows? But the key is it's more like an insurance policy where we look at it and say, okay, the capex is not that high on this. We can probably fund it from, for cash flow. And so it just makes sense to have it in there and be more independent of that particular issue. So that's what we're going to do.
Now, you may have already covered this, but just one more time here. What other operation milestones or goals does the company have in store for 2023?
Well, I think when we look at it, we kind of categorize it in terms of what we see as the most. We have a list all the time of different things that we look at, stuff that's sort of what we call as critical items or the most important things to get done, and then other items that are sort of nice to haves. Probably the 4 items we have right now that we'll want to see going forward is, first and foremost, December was tricky. We, in South Africa, it's a combination of Christmas and summer holidays because it's obviously the different time of year, reversed from North America. So we always know that December is going to be a little bit of we're going to miss some days there due to Christmas, New Year's, and just the overall holidays. It was kind of exacerbated in December we had unusual rains, a lot of rain, which makes it tricky for our screening systems. And then the power outages, which were really they really accelerated. So the number one thing that we see as being the goal for the new year that we want to try and get done is the power systems upgraded. So we're hoping to get that done in the first quarter. The second thing we'll be doing is we're going to add some additional large material screening systems. They essentially, what they'll allow us to do is put the larger material, say we dry screen from 1 millimeter up to say about 32 mil. We'll split off. We have equipment that we've already identified that we're going to install that will allow us to put all that larger material, say from maybe around 7 mil up through those machines. It essentially will double the throughput of what we can do right now. It's been planned for quite some time. So that's sort of the second thing that we want to see. As soon as we do that, we have a good relationship with Caterpillar. Most of our CAT equipment by April, May is paid off. So we'll be adding more bigger, larger equipment or additional equipment to the picture to be able to support that. And then additionally, like I was saying earlier, we probably only be focused on this initial, roughly 600 hectares of the 5,800 we have. With that's only about 15%. We've always known that the displacement sort of the general area that goes. We've done some drilling there previously. We know where the deeper areas that have the most potential for accumulation are. And so that's something else we want to get going on here right away is drilling and bulk sampling out there to see if we can locate some more. The original assumption was that, there was as much as 1,000 vertical meters of the pipe of Venetia was displaced. We know that Venetia is roughly around 100 carats per 100 tons. So when we look at that material, it's roughly 50 million tons of material. I mean, 50 million carats went somewhere and they didn't go far. Now, we're never going to find that amount, but certainly, the ability to, potentially locate 5 to 10 million carats in the surrounding areas is very real. So, the key is to get the project up and running, do these trial mining exercises, get the dollar per carat established, get the operations in order, get everything built out. And then as we did that, grow the project from there. So, yeah, those are the four main things. So, the power, the additional capacity, additional equipment, and then branching out into additional areas. So those are probably our four key items that we're looking at for 2023.
Sir, I know that in terms of news flow, Diamcor Mining is very conservative. Do you expect 2023 to be robust in terms of news flow?
I think it's going to be more, I'm one of those people, and I think most of our shareholders are the same way. Look, it's a public company and we want to keep people abreast in that. We don't typically put out news for no apparent reason just because we feel like hey, it's time for a news release. It's good to have good news flow, but we always look at it where, I don't mind putting news out if we've got good things to talk about or we've got real results here, meaningful. But, to me in mining, when you look at news releases, every check or every amount of money you spent, there's always various areas it can go to. And we just chose in the past to, stick to our knitting really and, put out news when we had to, but not really be overly promotional when we don't have to either. But I think that 2023, I think we're going to have some real, I think we're going to have some real good things happening that are going to, just in general, require more news flow. Whereas I think, that's the way I see it playing out.
Well, looking forward to it, sir. Leaving the project site, let's look at some numbers. Mr. Taylor, please provide the capital structure for Diamcor Mining.
Diamcor's sitting right now, we were in obviously better shape before COVID. Largely, we did increase, or we did have some dilution due to COVID, but it was pretty much every one of the existing shareholders and large shareholders stayed proportionately the same. So while the share structure went up, the actual shareholder ownings percentages really kind of stayed the same. About 130, I think it's around 133 million fully diluted. So for a mining company, not too bad. The real key is obviously with COVID and everything else that's gone on, these mining projects go up and down. Everybody gets excited about them as things are going great. Something like COVID happens or otherwise, and they get a little depressed. The overall mining space is down a bit right now. And, that's why we see right now this inflection point or the opportunity, the compelling opportunity. We traded probably around 20 cents or so Canadian. So when you look at that number, that's a sub $30 million dollar market cap on a company that, like you said, has shown some pretty good numbers in terms of quarter over quarter growth in that. We think the value proposition here is amazing. We've probably spent over the time it takes to get this built over a 10-year period and permitted and up and running, we've probably spent close to $100 million. So we think the value proposition is there. We think the inflection point in time is now. We just need to do our job in terms of getting the processing levels up, and then and just keep doing what we're doing, quarter over quarter growth. And I think that price comes to value. So I think that'll take care of itself in the end.
And just a reminder for everyone listening here, the ticker symbol for Diamcor Mining is D as in Delta, M as in Michael, I as in Indigo. And let's revisit that for one moment here. You've already committed $100 million to the Krone-Endora, essentially, and your market cap is sitting below $30 million. That is screaming sale.
It is. It's and look, there's a lot of different mining deals that, we've seen people spend $1 billion and they become worthless. This is an very interesting proposition in that, we're already demonstrating the viability in terms of, we can see roughly what the operating cost, per ton is. We can see what the revenue per ton. The diamonds, our average, we've sold probably a couple 100,000 off this project. So we know very well what the diamonds are worth. We know that they're probably over double what the worldwide average is. Worldwide average is probably somewhere around $100 a carat. When you mix all the gem and near gem with all the industrial and the high percentage of that, we're probably, we're seeing sales in the 200, 230, 250. I mean, we've seen, the project has certainly potential for big stones as well. Venetia, their largest, is up to 300 carats. So far, the largest we've pulled out is 91.6. But we're seeing these bigger stones. We had a 59 carat a couple of months ago. In that one quarter, there was $1 million plus stone. We're going to see these more as the volume goes up. That's the assumption and what the potential is. So it's something where a good 200-300 carat stone, if it's exceptional quality, you could actually do a majority of your market cap in one day. So it's look, it is what it is. I think that, like I said before, price comes to value, and I think that as we go through the next few quarters, if we can continue to demonstrate this quarter over quarter growth, I think that the story just becomes too compelling. And as you get, one thing we are doing right now, more so, as is we're looking at to bring awareness up to key groups, to high net worth, small funds, those types of things, guys that really can look at these types of deals and take us from sort of this level to where we can really start to do some numbers. If we can increase the size and increase the processing volumes, then we come a little bit more attractive to some bigger money guys. We've already seen that in past times when we were trading, well over $1. We've seen, bigger funds come in, AGF, Vertex One. We've seen these guys coming in at $5 million for about $1 a share. Different time, different momentum, everything else. But we think that right now, we think sort of 2023 forward, this is going to, I think, really when I look at the value proposition now compared to even then, I think we're in much better shape right now. We just have to demonstrate the forward momentum that we've got established here and keep going. That's the key.
Well, I'm a proud shareholder for the virtues you've conveyed so far in this message. I tell you what,
I appreciate it. I appreciate it.
I definitely have full confidence in you and your team, sir. Now, before we close, Mr. Taylor, what would you like to say to shareholders?
Well, I think, like I said, my thought right now is we have a great team, great group of people, great experience. Mining is not an easy thing, and diamonds are not easy to find. And I think we're positioned very, very well to take advantage of the what's unfolding in the industry. And I think we're going to do very well. I think 2023 is going to be another year of advancement. And like I say, I think the value proposition right now warrants consideration. And look, we're looking forward to the year and to getting going further. So, I like I said, everybody right now, it's about, like I say, awareness, getting the word out, telling people this is what we have, this is where we're at. this is what we're trying to accomplish in the next, 1, 2, 3, 4 quarters. And then, trying to attain those goals and let people become comfortable that, hey, quarter over quarter, this is going the direction we want. So that's kind of where we're at right now.
Last question, sir. What did I forget to ask?
I don't think too much. Like I said, it's 2022 was a year of great progress, a lot of hard work. The guys, I'm very proud of our team and our guys. They did a great job. And now 2023, December was a tough one. But, look, now January, February, March, we've got, we're just into the beginning of it here. And the key is to try and do better in that March quarter. And, it's busy. There's a lot to do. So it's nice. Everybody comes back to work, kind of around the 5th in South Africa. So things are starting to ramp up again. So it's, it's busy. So, I don't think you forgot really asked too much. Like I said, I think the opportunities there. I think the project has extreme. It's got a lot of potential. The partnerships with people are great. We're a long ways down the road here. This is not sort of a early stage type of deal. So it warrants consideration and having a look at. That's for sure.
Mr. Taylor, it's been a pleasure speaking with you. Wishing you and Diamcor Mining the absolute best, sir.
Thanks, Maurice. Cheers.
Cheers, sir.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.